All right, let's get down to brass tacks. This is it. We're using the 15-minute orb strategy on either QQQ or SPY. This is the NASDAQ. This is the S&P 500. Whenever you have a 15-minute graph, your first candle forms your first 15-minute opening range. You mark out the low, you mark out the high. Whenever you're very broke like I am, you're not going to have money to buy an actual share of SPY or QQQ at $500-$600 each, but you can afford to buy the options that increase in value for every dollar move. And with an option, you have what's called the Greeks. For every dollar an option contract increases is for each dollar move of the stock price. And these deltas are somewhere around 50. So if you buy this option contract, the one that's right at the money, after a break of orb, then for every $1 up, then that option contract is going to increase by $50. The average range of QQQ and SPY is about 0.5%. So you're expecting about a $3 move per day, at least. And that is a leverage factor that you use for when you don't have a lot of money. All right, so the rules to expiration. You always have to pick delta greater than theta, which brings you to the 2 or 3 day to expiration option chain. You must have in your strategy a hard stop, and you must always respect the stop loss. 25%. I've been struggling with this. 20 to 25% is where I'm at. Now, I also have a theory that if you're on the 4-day option chain, then you should have a 100% take profit. The 3-day option chain, 75%. 2-day, 50%. 1 day, then you're using a 1-to-1 risk to reward. All right? So whenever your price bounces around, crosses that threshold, you're going to enter into puts. You're going to buy the put that is right at the money, maybe even $1. Or if you're really broke, go to the 0 DTE option chain and buy the one that you can afford. But you have to respect your stop loss, because the only thing that you can control in a day is how much money you're going to lose. And this is it. This is the path to riches. Now, you're going to exit the trade when either your take profit is hit, or whenever you have a reason to exit, which could be your volume analysis profile. Your 9 exponential moving average is going to cross. Your price is going to cross the 9 EMA. That's an exit signal. Whenever you hit market structures that are key levels from the previous day high, that's an exit signal. And this is it. This is my strategy. Now, this is what I'm using. And I entered the orb whenever it broke right here, which was arguably very early. But look, the volume on it was okay. I was like, it's going to continue on in a downtrend. So I put in the order to buy one put contract on the 1 day to expiration options chain, and I have a 25% stop loss. And this is where I just, after you take a trade, you can close your computer and you can walk away because the work is done after that. Now, to be successful in the stock market, it's not about making money. It's not about dollars. It's about showing up and doing this. Only taking a trade when the price crosses that threshold, and after that, just letting your stop loss and take profit do their work. And that's it. If you can do this, you are rich. Now, me, it took me 9 or 10 months to create this strategy and get to the brass tacks of it all. But I'm not successful yet. And I'm not ashamed to say that. But guess what? This is the start of something great. And I'm going to keep with it. I'm going to keep showing up every day and accurately predict price movement. And after that, I just think that in 2 or 3 years from now, if I can continue to maintain this strategy and my discipline, then money problems will be a thing of the past. I invite anyone who wants to join me. I just laid it all out for you. I'm tired of being broke, and I'm sure a lot of people out there are too. All right. Have a good day, everybody.